Well, ladies and gentlemen, my name is Greg McCloskey from Forexlive.com. This is a preview for the Forex week of October 6th, starting October 6th, and it's going to be on the New Zealand versus US dollar. I'm going to call a correction over, time to continue the trend. Why do I say the correction's over for this currency pair? Well, if I go to the hourly chart of the New Zealand versus US dollar, I can look at the green line right here, and this green line represents the 200-hour moving average. We can go back to this day right here and see how the market peaked against that level. We peaked against the 200 here. We peaked against the 200 here and here and here and here and here. We peaked against it here and here and here the last time on Thursday and Friday of last week, and the market then started to drift to the downside, had the unemployment numbers which pushed the market down further, and we bottomed against the low that we saw on Tuesday's day of trading. So we have a nice little double bottom in place right there. On the way to the downside, we went below the 100-hour moving average, and note here how the market held underneath that 100-hour moving average on the correction. Sellers were happy to sell under the 100-hour moving average. That's going to be key because that's going to help define our risk for trading this week. We should not see the price move above the 100-hour moving average. If it moves above the 100-hour moving average, all bets are off that the trend is going to continue. That's my thesis this week, that we should not see our price move above the 100-hour moving average. We also have this trend line right here, which comes in around the 78 level or 78.03 or 4 level, and that is also a key resistance level. So not only do we have the trend line here, the broken trend line, we also have the 100-hour moving average. So again, my thesis is risk is defined against the 78.04 level, 78.15 level, or the 100-hour moving average. We should not go above that level. If it goes above that level, then we may see another test of the 200-hour moving average, but I don't want to see the price move above this level. That's the closest level. That's my ceiling in trading this week. Now, what do we have to do on the downside? Where are the levels that we have to move through on the downside? And obviously, if we move below the 77.37 level, that would be good, and we would expect to see further momentum to the downside below that double bottom. And then we'd have the low from last week at 77.07, which happens to be the lowest level going back to 2013. What was the low level in 2013? That was 76.82. And as you can see, during these 4 or so weeks, the market had a number of different lows, bang, 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 against that level, and held that level. So that's going to be a very strong level, or it is a very strong support level. But if we break through that level, then we should see further momentum to the downside, correct? And the answer is yes. That would make us trading at the lowest level going back to 2012. So it's a key level that we have to get through on the downside. So on my hourly chart, I put a horizontal line at that 76.82 level. And so our targets become get below here, then get below there. And as long as we continue that trend, then we have the ability to move lower. Now, how low can we go? And I go to the weekly chart and I take a look at the average trading range for 1 week, just 1 week. And what that gives us is the range for each week. And so you can eyeball over time what is the ranges for the New Zealand versus US dollar for a weekly basis. And if we look at this year alone, okay, there's just this year alone, we have a high of about 245 pips and we have a low about 73 pips. I think we're over the low trading ranges. We've been trending to the downside, and trends are fast directional, tend to move in larger trading ranges than normal. And so we're actually seeing the ranges increase like we did through here, okay, when the trending market here. So we're seeing the ranges increase. And if I take the midpoint of, let's say, the 73 and the 245, it comes out to about 165 or so pips trading range that we can expect. I'm going to discount this high right here, by the way, that we can expect something around 165 pips for the New Zealand versus US dollar in trading this week. Now, I set a peak of around 78 level. I assume that we're going to get around to the 78 level, and then we're going to start to move to the downside. If we have an average trading range of 165 pips, that's what we're expecting. 78 less 165 pips would take us back down to around the 76.35 level, wouldn't it? 78 minus 165 equals 76.35 level. So that would be a target that would have just off the average trading range. Now that would also be about, I don't know, about 50 pips lower than the low from 2013. So if we do get below the 2013 low, there's a good chance that we can go another 40 or 50 pips to the downside, don't you think? I do. I think that that's a pretty good shot that we get down to that level or see further momentum to the downside. So that's what I'm going to be looking at this week. I'm going to be looking for a move toward the 76.35-ish type area. I don't necessarily think that may even hold it. It may be that we have a 200 pip trading range. It may be that we don't get up to the 78 level, that we just get up to the 77.70 level, in which case 165 pips is going to take us below that. You know, we're going to be looking toward the 76 even level. My point this week is this: we shouldn't go above the 78.15 level. That's my risk. We should also, because of that, go below our low price from 2013. We should go below that level. If we go below that level, we should see further momentum to the downside as we break below the 2013 low. And so there's a potential for a continuation of this trend. All hinges on the fact that we stay below the 78 to 78.15 level. If we do that, then I think the trend continues and we have the chance to move down to a minimum around 76 level, maybe even down to the 76.35 level, maybe even down to the 76 level. Who knows? But the point is, we have our plan. Our plan is in place. If you like this video and want to see more of them, please click on the subscribe button here in our YouTube channel. Also, for your Forex news daily, always visit us at forexlive.com. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.